Good morning. Welcome back to the Broadcast Retirement Network. I'm Jeff Snyder. This is BRN AM for Tuesday, September 14th, 2021. And our top stories today, an update on the residential real estate market and encouraging affordable housing. Well, joining me now to discuss this and a lot more is Dr. Lawrence Yun. He is Chief Economist at the National Association of Realtors. Dr. Yun, pleasure to see you again. Thanks so much for joining us on the program this morning.
Well, Jeffrey, thanks for having me on the show again.
Oh, it's great to talk with you. And you know, you and the NAR, you guys have great resources in terms of collecting all this data. And I think where I want to start is, what's the latest information that you have on this real estate market, in particular home buying? Where do we stand in terms of the median price of homes and looking across the country?
Well, the home prices are still reaching all-time high with each passing month. But the pace of growth should be slowing down because what we are seeing is that the home buying activity, which have been at absolute frenzy, frantic, multiple offer situation, say 6 months ago, well, it is no longer the case. Some multiple offers are still occurring, but now it is less frenzy, settling down, and home sales are usually the early indicator about what may happen to home prices. So given that home sales are settling down, I think the price growth will also begin to settle down in the next few months.
That is good news. And we're going to talk about affordability in our second segment. But just to kind of follow up on that, interest rates play a very important part in our market system, and it has implications to, not directly but indirectly, I believe, with mortgages. The Federal Reserve has signaled that, or at least Jay Powell has signaled that they may start to do something. The language isn't always as clear as I think we would like. But what are the implications if we do look to, for example, change interest rates? What could that mean towards mortgage rates and the market?
The mortgage rates are still at near historically low point at about 3% on average. If people can ask, what did you pay for your home 10 years ago, 20 years ago, and the mortgage they got? So 3% are just amazingly low rates condition today. But we do anticipate that this is the low point. It will steadily rise, maybe nothing alarming, but it will rise because, as you mentioned, the Federal Reserve, I think they're looking at the consumer price inflation data carefully, which is running high. So the first action will be something called taper. Federal Reserve has been purchasing mortgage-backed securities, those issued by Fannie and Freddie, aggressively. Now they may begin to pull back, which means that Fannie and Freddie has to find other buyers. It could be Chinese government, it could be Wall Street firms, it could be German mutual fund. But if they have to find alternative buyers, they have to offer higher interest rate, which will be passed along to consumers. So that first action of tapering would begin to boost a mortgage rate lightly, nothing alarming. Then going into next year, without a doubt, I believe that Federal Reserve will begin to raise interest rate, their short-term interest rate, which will also have impact on mortgage rates.
Yeah, you really broke that down very clearly. I even understood that, and it takes a lot to get into this brain, Dr. Yun. Let's talk about building homes, because I think that'll nicely dovetail into the end of the segment, into next segment about affordability. Where do we stand with home building? Because if I recall correctly, you remind me if I'm wrong, or tell me if I'm wrong, that we didn't really see a lot of inventory of new homes for people to move into, and therefore people are buying existing homes primarily. But you tell me if I'm wrong.
Well, the new home sales market comprise generally about 10% of the market, while existing homes are about 90% of transactions. And the builders have been undersupplying in relation to historical average for the past 15 straight years. But in 2021, it looks like they will go above average. But this is not enough to compensate for many years of underproduction. Well, at least the builders are overall improving. There's still some trouble with the material costs on building homes, along with finding skilled construction workers. But given the profit motive with record high home prices, I think the builders can build more, and they can also seek out cheaper land, knowing that we have this work from home flexibility for some office workers. So maybe they want to go further out from the city centers and seek out more affordability.
Yeah, and bring up a really interesting point. And are there certain areas of the country that are seeing greater growth in terms of sales or vis-a-vis higher home prices?
In terms of the higher home prices, the Rocky Mountain states are the stars, whether it is the Idaho, Utah, Colorado, and one can even say, Arizona, in terms of the mountain time zone. So super strong price appreciation in this area. Part of the reason is the migration pattern, especially from Californians moving into the mountain zone states. So that is helping the price growth. In terms of the building activity tends to be more active in the southern states. There's more lax regulation about building activity. So southern states tend to build more homes and hence have, relatively speaking, more adequate supply, and therefore home prices tend to be more affordable in the southern states. So these are some trends that we are observing.
Let's talk about affordability. If you're a first-time buyer out there, I think that if you own a home and you're able to leverage the equity in the home to get a new home, maybe a little bit easier. But if you're a new buyer, you never owned a home before, maybe you've just rented, it may be a little bit challenging. What can be done to help people with affording a home? Because as we've talked about, the median sales prices, even though it's beginning to tail off, it has gone up over time.
Oh, yeah. The reason why the home sales are settling down is because the first-time buyers are simply priced out. There is the American dream of a desire to own a home. And the first-time buyers would like to be part of that American dream, but with prices having risen so much, it's simply out of their budget. And that is why home sales are settling down. So how do we bring about more affordability? Well, first, just increase supply. Just economics says that, increase supply with the demand existing, that the price condition would be more moderate. So just anything to increase supply would be good. But the other measure is that there are many vacant homes, believe it or not, that is uninhabitable. But if the money can be spent to rehab those properties, that's additional supply. So we don't have to build new homes, just trying to make the vacant property into more habitable units so that that will bring supply. And some of the inner cities, or I should say more New England areas where there is this large duplex or triplex, that used to be a single family home, but many immigrants, when they came from, say, Eastern Europe and elsewhere, they said, well, these homes are too unaffordable, so let's just buy it and rent out the other units to make it affordable. So that's how, at least in the American past, has worked.
Yeah. Dr. Yoon, I need to take a quick commercial break. When we come back, we'll talk more about housing affordability and what can be done to help first-time buyers. You're going to want to stay tuned right here on BRN AM. Imagine a new television network that will make you richer, healthier, and in control of your financial future. This network is for the policewoman in Nashville, Tennessee, the baker in Dubuque, Iowa, the teacher in Lexington, Kentucky. We want to make the idea of savings and retirement culturally relevant. But what do you see as a defining issue of the midterms, especially for the smaller businesses? I mean, they are the lifeblood of the American economy. Featuring exclusive interviews, current affairs, and docuseries. 33 years old, you retired early.
The philosophy is money only matters if it helps you live a life that you love.
But you got to start thinking about retirement as soon as you get in.
The Broadcast Retirement Network will drive very high engagement with premium partnerships. So this isn't retirement and savings for your parents or grandparents. This is for all Americans. And we're going to change the way you think about money. Welcome to the next frontier of retirement and savings. This is BRN, the Broadcast Retirement Network.
Are you stuck with a low credit score? A credit report and score that's causing you to be denied credit or pay higher interest rates than others for the same things? Then do what Terrence did and call Credit Repaired for your free credit evaluation to help restore your credit.
I started thinking about buying a new house, and my score wasn't where I needed it to be. I called and spoke with one of the representatives, and we just had a good conversation, and I liked what he was saying.
Just one call for his free credit evaluation was all it took to start back on the track to repairing his credit.
I'm seeing the deletions and I'm getting the report, so I know something's being done. It does make a difference to me.
All it takes is one call to get started.
Credit Repair has given me a second chance to have a better credit score.
Don't let a low credit score hold you back another day. Do what Terrence did and make the call for your free credit evaluation.
Call 800-819-4152. That's 800-819-4152. Again, 800-819-4152.
Welcome back. We're talking to Dr. Lawrence Yun of the National Association of Realtors. Dr. Yun, thanks so much for staying with us this morning.
Well, it's a great topic.
It is a great topic. Let's talk more about affordability. And when we, going into commercial, you mentioned really some historical, immigrants moving into this country, but also reinvestment into some dilapidated or houses that are unable to be, occupied. Is that something that, picking up on the latter, is that something that state government or federal government might be able to assist with? So taking tax revenue and pushing it towards that direction?
The White House has brought some housing affordability plan. Now, it's moving in the right direction. I don't think it will truly address the total housing shortage situation in America, but moving in the right direction. And one of the ideas is to provide some funding for the local housing development agencies so that they can provide funds for the local developers to rehab or just build more additional homes, because the numbers, the construction workers, cost elements, and it's hard to build affordable homes, but with added government funding, the numbers do work. Or it could be a tax credit, provide a tax credit for the builders. So anything to boost supply. In addition to that, they're looking at the possibility of expanding the mortgage availability, such as trying to have the rental payment as part of their credit scoring method, so that people who have demonstrated financial responsibility by paying rents on time. So if you're a potential first-time buyers, please pay rent on time, because this will give you a better chance of owning a home under the new Fannie Mae sort of lending criteria. So that is also to enlarge the pool of first-time buyers.
I really like that idea, because if you don't pay rent, a lot of times if you have a landlord who's I don't know what the right word is, but semi-sophisticated, they can actually ding your credit report. So it's good to get credit for making rental payments and being able to leverage that where you don't have like a mortgage or you don't have a housing payment per se on your credit report. Really, really a good idea. I really like that idea. Let's talk about renting a little bit, because I think more and more Americans, I rent, my wife and I rent our apartment here in Charlotte. I think more and more people are renting. What does the renting market, even though it's not real estate sales, what's the rental market look like?
The rental market in the early months of the pandemic it was very challenging. So if one was a landlord or property owner of apartments, it was a scary time. We lost massive number of jobs. People, tried to move in with their friends or family members or went to the basement of their parents' house. But now we have seen steady job growth. We are not fully back up in terms of total jobs, but we are making progress. And consequently, people are popping out of the basement, seeking out their own housing units, and therefore the rental demand has picked up sizably. Interesting phenomena is that even as the home sales market is settling down, we are beginning to hear multiple offers on rental property to rent, not about investors buying, but say a property is listed for $1,500 per rent. There's 20 offers and people are saying, please choose me. I am willing to give you $200 extra in each month. So multiple offer, especially on single family property, large size single family property out in the suburbs. This is quite a new development. And consequently, the rental demand is rising and rents are rising.
Yeah, I'm so used to it the other way, which is, they offer you incentives. Maybe they offer you a month of rent for free or 3 months free or some type of rebate. It's so interesting to me. What do you think has led, looking at the data, what do you think has led to that phenomenon? Maybe people are less comfortable with buying a home. They can't buy a home and therefore they like the flexibility of renting and therefore they're willing to go more all in on renting?
So the potential first-time home buyers, they're getting priced out. So they're essentially saying, time out, I'm going to lease for the next 12 months. I want to see what happens to the market. But as people are getting priced out from buying, they're forced to rent. And they're signing this 12-month lease, 6-month lease. And therefore, their rental demand is holding strong, combined with the fact that people are popping out of the basement. Those people who lost jobs, now they have regained jobs, and they're seeking rental units. So we are seeing this, again, huge increase in rental demand in the recent months with rents rising strongly. The government data is saying rents are rising at only 2%. But when I talk with people who are managing properties, they're saying rents are rising 4, 5, 6%, much higher than what the government is indicating.
Yeah, and I get maybe that's just the lagging. Maybe there's a lag in some of the collection there. I would think. Are there certain areas? We saw during the pandemic, people. I think you even said this in some of your previous statements. Just to paraphrase, that people moving out of cities, maybe going into more suburban or less urban areas. Are there areas of the country that are seeing higher rents than others? Or are people going back to the cities like New York, Chicago, Washington, D.C., other places?
So the virus is not yet under control. And when people will get back to office on more normal basis, on the new economy, some hybrid model, it's still hard to foresee. Many companies giving greater flexibility. But so the city downtown office buildings, those are beautiful buildings, but it's sitting empty. And consequently, people are saying I can rent further out in the suburbs. So generally speaking, we are finding that the rents are stronger, seeing stronger growth out in the suburbs or exurbs or smaller sized towns. And the Sunbelt cities, whether you are looking at Jacksonville, Raleigh, North Carolina, Austin, Texas, San Antonio, they are seeing quite a sizable new residents coming in, and initially they are renting.
Yeah. Last question, Dr. Yoon. You mentioned commercial buildings. Some companies giving up their commercial space because they've moved to a more hybrid model. Could, given this housing shortage, could we see some of these buildings be converted to apartments or condos or some type of living area so that people who own them, landlords, could make back some of the money that they've spent over the course of the pandemic?
Absolutely. Say shopping mall, people are doing more online shopping. Some of the office building may never fully recover or have the full vacancy. And consequently, is there a way to repurpose the building? Now, there's a cost element in terms of trying to put it from commercial use into residential use. So there's cost element. And this is where the federal government can come in, either through tax credit or some funding to, given that we have a housing shortage, and it's in the interest of the country to assure that people are adequately housed in an affordable way. So maybe we can repurpose building with some stimulus impact for the developers.
I always wanted to live in a shopping mall. After seeing the movie Dawn of the Dead, I always wanted to live in a shopping mall, and maybe I'd be a good candidate for that. Dr. Yun, we're going to leave it there. Always a pleasure chatting with you. Thanks so much for breaking it down, and we look forward to having you back on the program again very soon.
Thank you.
That wraps up this episode of BRN AM. Have a topic of interest, someone you think we should talk to, drop us a line. And don't forget, for all the information in retirement, markets, technology, personal finance, so much more, check out today's edition of our daily newsletter, The Morning Pulse. We're back again tomorrow. Until then, I'm Jeff Snyder. Stay safe, keep on saving, and don't forget, roll with the changes.
Are you being audited and do you owe the IRS $10,000 or more in back taxes? Is the IRS threatening to take more of your money? Don't fight the IRS alone. The Tax Doctor is here to help you negotiate your tax bill and reduce your stress. The IRS can freeze your assets and seize your bank accounts, but you can stop these IRS actions. The Tax Doctor will work with you using our years of experience to represent your case to help you get the best resolution under the IRS guidelines. Help is here to deal with the IRS to reduce your stress. We've handled thousands of cases, so we know what we're doing. If you owe $10,000 or more in back taxes, do not call the IRS alone. Call a Tax Doctor now for a tax emergency analysis.
Call 800-224-6439.